Hi everyone and welcome to our market analysis videos here at Zenfinex. For today's video we're going to be giving an update on the Nasdaq forecast from a couple of weeks ago. My name is Connor and I'm the Senior Market Analyst at the company, providing to you these daily videos on market commentary and educational content. So for the Nasdaq I'm going to be comparing the themes from the previous video to now and how it's going to affect the index. Then I'm going to move on to the chart to see if the index has moved the way that we expected and what to look out for the rest of October. So the Nasdaq themes for October, I think it's really obvious to start with the switch of Federal Reserve language over the last couple of weeks. And I've mentioned this previously and it's something I'm going to continue to mention. The taper timeline that the Federal Reserve give is going to be critical as it's going to show when the eventual interest rate hikes are going to be introduced. The message from them has been clear. The Federal Reserve want to begin tapering in early November. The jobs report last week was another disappointment compared to the forecast, adding 194,000 jobs into the economy in September. However, pretty much every expert that you listen to on their opinion on this, they've said that it would have taken a number close to zero to change the Federal Reserve's mind now. So really, it was quite irrelevant. And the fact that the Nasdaq reacted to the upside from this is actually potentially an opportunity to sell. When the FOMC meeting minutes are out this Wednesday, expect Jerome Powell to remain hawkish. For the Nasdaq, it means there could be some more corrections ahead. Given the magnitude of stimulus that is propping up the markets or has been propping up the markets, it's going to create an environment where yields are rising and fixed income becomes more attractive than before. And with indices like the Nasdaq being so overstretched and volatility rising, we could see some more chop and churn for the rest of October. But where do we stand with inflation, which is obviously another one of the most important, if not the most important risk to stocks, as I've mentioned before as well. It's still being pretty much described as transitory. But if there are continuing clues that stagflation is creeping into the world, and for those who don't know, stagflation is inflation without economic growth, a really bad and awful environment to be in, then it could get more volatile for stocks. But let's take a look at the chart and see what we can aim for the remainder of October. Okay, so looking at the Nasdaq on the chart and having a look at some key levels to watch out for. I've left the drawings in there from last time, and you can see that I marked this swing low that we had from July, which is at around 14,450, and I mentioned that there might be some market manipulation around this level, and I feel like we've seen that now. So as you can see, if you was a trader using kind of beginner techniques and you was to buy the market, it'd be quite sensible for your stop loss to be at this swing low, because you'd say if the market's going to go below that swing low, then the market wants to go lower. But actually, that's just a lot of orders, pending orders, and stop losses sitting here. So what the big institutions like to do is run down and grab liquidity, which is why I've got this little dollar sign here. So liquidity's been grabbed on these lows at around 14,450, and the market instantly spiked up higher. We have been struggling a bit since then. We haven't really managed to recover fully, which is kind of typical of the chop and churn nature of the markets at the moment and the volatility increases, which is exactly what I said. If I mark some key levels to watch out for, where I can actually see this market. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. And I'll get rid of this. This was the bullish order block that I had before, and I said if it breaks below there, then we are bearish. So let's get rid of that. This is the next order block that we can actually look to sell from, the last piece of bullish pressure before the bearish impulse. Happens to be sitting just at around the 50-day moving average. So I think we might see a situation where we've seen this liquidity grab, we move higher up to this order block entry level, and then we can start to look lower again. And I do think that this market still has some more chop and churn throughout October, especially with stagflation concerns and the hawkish, well, most likely hawkish Federal Reserve. Again, I'm still really looking for the Nasdaq to fall to something towards around 14,000 and just have a test of that 200-day moving average, which would be a great buying opportunity, because I'm not a big fan of selling this market because I know how strong it is on the longer time frame. That you can just see, I've shown it before, but look, you can see that you sell it at your own risk. But I'm wondering whether we're going to get a second wave of downside like we had here. Other than that, yeah, so I like this order block to sell from. If we are to continue higher, then we need this low to hold. This low at around 14,387. We need that level to hold to potentially make a double bottom. We could do here, if I zoom in a bit further, we could make a double bottom here and go higher. The only way I'll really look for a sell from this order block level is if we do kind of get a retest of this swing low. If we go onto the 4-hour chart for the bulls in the market, then I'll leave the daily drawings on there. Then we could look to buy from this order block here. You can see it, we actually run up and we broke this structure high and this structure high. And if we can get a run down into our 4-hour order block, I'll be targeting this daily order block that I have up here, which is quite a nice risk reward, I'd say. But I would stress that I would like to kind of get out of the market as soon as it reaches at around 15,200. That's around a 5.5 hour trade. We could get some more liquidity being grabbed on the sell side, so we may get a situation where the market runs through, grabs liquidity on the bottom, then aims for our daily order block level as well. Actually marries up nicely with the 200 moving average on the 4-hour chart as well. But yeah, for me, it's potentially short-term buying, but at the moment, I do think that we're going to get a situation where we do run up into our daily order block level. I'm going to look for something like 14,400 or potentially 14,000. If we can get a break above, of course, which would be so typical of this market. If we did get a break above this order block level, then yeah, I think we'll get a small retest, and I think for the rest of the year, really, we're going to be looking towards that 16,000 level. That wouldn't surprise me either, which is why I sell the Nasdaq with a lower risk percentage, and I normally wait for the buy the dip opportunities. So that's it for Nasdaq today. I hope everyone's enjoyed the video, the update from last time. If you could like and subscribe to the channel, that would be great. Helps boost our channel. We do really appreciate all the likes and comments we get as well. Other than that, I hope everyone has a great trading day. I'll catch you all for the next video, which will be tomorrow.